Alright, ladies and gentlemen, what is going on? It is your man Z Moose coming at you live from the Bentley dorm room. Alright, pretty much today, what I'm going to go over is it's a visual interpretation of the strategy that I've been implementing on the S&P E-mini S&P 500 E-mini futures. As most of you know, as a lot of you know, I've been day trading this for about 3 weeks now. I've been trading futures since the beginning of August, but I'm starting to mold myself into more of an S&P 500 E-mini futures trader over what I started with, which is crude oil. So what we will be looking at today is, like I said, a visual interpretation of the strategy that I've been implementing with my trading. This would be an example of the trade I was going to take on Friday, but I was looking actually for 12.1675. I got it, but I got it on the, I got it on the bid, not the offer. So I did not get filled on a long contract, which kind of sucked. But I had a working order in for that and didn't get filled. Should have taken 12.17, decided against it, just because if it would have continued lower, it would have had me stopped out with my risk reward a tick below 12.1625. So, I didn't like the setup, but I should have taken it all in all. So, what are we looking at here? Pretty much the strategy is, if I would have entered at 12.17, I would have had 4 contracts. From those 4 contracts, I would have ridden it up to the next blue line, which was 12.1950. That did get hit on the bid. So that actually broke to 12.1975 on that run. So I would have locked in 2.5 handles from my initial entry, which is $250 on 2 cars. So I would have still had 2 cars left. Here is where the strategy changes up a little bit from time to time, because as you can see, the 34 EMA on this 5-minute chart is sitting right there, and I was looking for a test. It looked like we could have pulled off a test there, but the offer became very strong, blew through it quickly, popped back up, and then range traded in between about 12.18, 12.1775 to 12.20-ish for quite some time. It was about an hour that it traded through that. So I actually placed my stop. My stop would normally be, as you can see down here on this note, my stop would normally be at 12.1850, but because of the 34 EMA, I actively monitored the position and stuck it a tick below the 34 EMA at 12.1825. If I would have gotten stopped out, which I would have, that would have been the final 2 cars, and I would have taken away $375 on the trade. That's pretty good. For my account size, that's pretty good. I will take that. Normally, I will be looking to maximize my profits, and if I would not have gotten stopped out here, if it would have held the 34 EMA all the way, I would be looking for this $450 on the final 2 cars, which would have made the entire trade a $700 trade. That's what I look for off of that. I like to take profit just to lock in profit on the trade, move my stop up, and then pay attention to the profit here. But again, if the 34 EMA held and we continued to, let's say these 2 candles didn't exist, 34 EMA holds, we ride higher, we see this much sooner than this nice hour-long consolidation period. It breaks out above 12.20. We see 12.2150 get hit. I walk away from the trade. Now, what happens, I leave a lot on the table. As we roll through the close, I'm leaving a lot on the table on this trade. I will also actively monitor these final 2 cars as well, to just kind of not limit myself from losing any profit. So if I see this occurring, I will probably take this off. If I see a lot of momentum coming in, if I see a candle, these 2 candles coming in like this, and a hold of the 34 EMA, I will most likely move my stop up to 12.1950, maybe even 12.1975. But instead of limiting my profit, I'm going to limit my risk, and that's the smarter thing to do. So good luck. I hope this visual interpretation helped, and I will see you guys later tonight.